episode number 27.
Wow,
You know what?
27. I remember when it was episode 26. Feels like last week.
You know what is fascinating about when the market is super tumultuous is
What?
that I hibernate. I basically don't do much, and it looks like you haven't had any trades since last week either.
Yeah, I took a little bit of a break. I mean, when there was the initial sell-off, I was taking advantage and buying, and now
And
I'm
then
just
you
taking
run
a
out of
breather.
cash.
Well, for I still have plenty of cash, fortunately, but I don't want to spend it all immediately. I
Yeah.
want to keep some of the, Kevlar in place.
No, no, that makes sense. That makes sense. We have a
Yeah.
decent agenda today. What all do we have on the docket?
Yeah, so Robinhood had some exciting announcements yesterday
Ooh,
involving
yes.
letting the public invest in private companies. Rivian had their earnings last week, and they had a bit of a pop after earnings. We have to talk about earnings this week. We have Doordash, Carvana, Figma, all reporting this afternoon. Uh, I have a little idea for how Bumble could grow its user base, which
Ooh,
I want to talk to you about. And
okay.
of course, as always, we have our listener questions. So if you have any questions, feel free to send them to us in the chat. So let's start with Robinhood. They had a presentation yesterday announcing a new venture fund. Hamid, do you want to go over the
Yeah.
announcement
So
and what it means?
so yeah, the Robinhood announcement about being able to open up private company investments to the masses is, I think, a super exciting one because here's what happens. Um, in order to invest in a private company, you basically have to currently be an accredited investor, which basically means you have to be a multimillionaire, have pretty substantial income in order to have the opportunity to invest in early stage companies. And in some cases, even late stage companies like OpenAI is no longer an early stage company, or SpaceX is not an early stage company, but the masses cannot invest in those companies directly, largely because there's a bunch of regulations that sort of limit the number of investors a private company can have, but also to protect the masses, there's laws that prevent people who supposedly are not financially savvy to be able to invest in these companies without knowing them. So it's intended to be public protection, but it turns out that like you're basically keeping the masses away from being able to invest in something that might be fast growing and exciting, right? So you
Right. There's
can't.
an element of like, this is how the rich stays rich.
Yeah, so that's one way to look at it. Another way is to that like you're protecting innocence because 95% of startups basically fail. So you don't want the masses to be losing their money. Either way that you look at it, I think that that it doesn't solve the problem by just saying only the rich can invest in this, right? Because even the rich can like lose their money, and they don't necessarily have great track records. Um, but anyway, the laws are what they are, and what Robinhood is doing here is raising a fund. In this case, they're raising their first fund to be about $1 billion that they're going to invest in private companies. And in fact, they've already invested a few hundred million. So they've seeded the fund either themselves, or I'm not exactly sure where the existing funds came from. But they're having the fund itself become a publicly traded company or a publicly traded entity. So the fund is going to be to have its IPO at $25 per share, and you can invest in that fund by buying those shares. And they're essentially the IPO is going to give them the remaining capital of several $100 million where they're going to invest in new private companies. And what this does is it makes uh, it's basically essentially the same thing as a venture fund that again, rich people can invest in. Usually, these funds have a $250,000 or at least $100,000 minimum. In some cases, the minimums can vary depending on the size of the fund. And then they have what's called a management fee, which is typically 2% annually. So if, let's say, you can imagine a fund that's $1 billion, 2% annually for management fees means they can take $20 million a year just to like operate the costs of the fund, the people who are analyzing the companies that are investing, all this sort of like office expenses, et cetera, et cetera. And then on top of the 2% annual management fee, they also take 20% of the upside. So if like that $1 billion becomes $2 billion after 5 years or 10 years or whatever, in a typical VC fund, what would happen is the management team would take 20% of the extra $1 billion of upside. So right off the bat, you shave 20% of the upside. So now 80% of the upside is remaining, 800 million in the $1 billion example. And that is what the fund owners would be able to get. Robinhood is doing away with the carry. That's called the carry that the management team gets for these funds. So it's actually a great deal, even if it was a private fund that had the same rules as any other VC fund. But then the additional fact that they're opening this up for any investor to invest in is pretty fantastic. Now, you might say, well, these guys are not VCs, and are they going to be able to do as well as the typical VC company does, or VC investment firm does? And my guesstimate to that would be that they're going to do even better because of Robinhood's exposure and Vlad in particular, and being in the heart of Silicon Valley, which is where a lot of these companies are often based from. So um, in tech, Silicon Valley is the sort of heart of the tech industry, and most of the startups are in Silicon Valley. And then there's tons of VCs. There's literally hundreds of VCs fighting for finding the best deals possible, and the best companies get to choose which which VCs they want to have as investors in them. So, you know, the investors that can give them the most exposure or highest probability of success are the ones that the best companies would choose. And in this case, if you could get Vlad on your side, or if you could get the exposure of Robinhood, where like all these people who are invested in this public fund could see information about what's invested in that fund on Robinhood, which might expose your company to hundreds of thousands or potentially millions of people. It's pretty exciting. And I suspect that Robinhood is going to actually have the best opportunities for investments in these companies. So all around, this is super exciting just as an investor, right? Like as an investor in private companies. I happen to have multiple funds that I've invested in, and that all is pretty exciting. Then an additional thing that is, I can't tell you how fantastic it is the ability to be able to exit your investment in these private companies at any given time. Because technically, you're invested in a public company that happens to be making these private investments. So you can sell your shares in that public entity at any time. So at $25 per share, which is the starting price, but at any time you can sell them or buy into them. So currently, I have multiple fund investments, and I'm probably never going to do this again. And the reason I'm never going to do it again is because the money I have put aside in these funds is tied up. I cannot access it. I tried to sell a particular fund that is supposedly up multiple hundreds of percents from what my investment money is from roughly 7 or 8 years ago. And I can't even get my original investment back on the secondary market. So I just basically have to wait until these private companies have exits, and they try to, the fund decides to return my money as an investor. So as a private investor in these funds, your money is essentially tied up. So like what's funny is that Vlad and Robinhood sort of like had this event, was it yesterday or the day before, where they went over all of these details. And I'm sure that there's a lot of people who are watching that event skeptically and thinking that like, oh, this is probably like they're trying to pull one on them. Absolutely not. This is like the best possible way to invest in private companies. Now, private company investments are not necessarily, the greatest thing, but in terms of like the opportunity for even rich people to invest in these private investment funds, I think it's still better to invest through the Robinhood fund as opposed to directly into some VC funds. So all aspects of it seem very positive. Now, how does this sort of translate to revenue for Robinhood? Well, if Robinhood provides the only access to be able to invest in private company funds and be able to get in and out anytime you want, that's far more attractive than the Morgan Stanley or the Goldman Sachs, who also gives you access to some of these funds, um, or just going directly. I think that Robinhood is going to end up getting more accounts and larger accounts as a result of all of this. So, um, my speculation is that this is a fantastic thing. It's just another example of Robinhood innovating and just kicking butt in product introductions and really being there for their customers and lowering the fees on all this stuff, which is all fantastic. It's multiple layers of goodness here. So,
Okay. I have a lot of questions for you because you've been on both sides of this where, like you've said, you've invested in VC funds, but you're also, you've been a founder in multiple private companies. So let's start with like the dynamics of the fund itself. Because it's publicly traded, there's a good chance it ends up trading significantly above its NAV or net asset value. What are
yes.
your thoughts on that?
Well, the good thing is that the marketplace can actually help determine what the NAV is, right? So there's sort of like what's interesting is that in the private sector, the asset value is actually very, very subjective, meaning like how much is SpaceX worth? Well, the public is not sort of like deciding this in sales and purchases of the stock, but rather, some very few people combined with Elon's determination whether or not he's willing to accept that valuation for the next raise is what's determining what the asset value of SpaceX is. And generally speaking, it comes down to just like literally a handful of people determining that. Now, and then that asset value gets taken into account for these funds. And in Robinhood's case, let's take a collection of these asset values and say the asset values are $1 billion, and the fund's market cap should be roughly $1 billion if that's the case. Now, the fund, because it's an IPO and it's an open stock, might trade higher, it might trade lower. Well, if it trades higher and you believe that the asset value is not worth more than what it's indicating it is, then you should not be buying the shares at a way higher price. And if it's trading at lower and you think that the asset value is worth it, you should buy the shares, right? So the market will actually help determine a little bit more accurately, possibly, because they might think, well, wait, the asset value of SpaceX is given at 800 billion, but I think SpaceX is worth at least twice that. So I think that the fund should be worth more, and I'm going to buy it at this price, and it might cause the fund's price to go up. There is some sort of market discoverability there that might make the market cap of the fund actually a more accurate indication of what the asset value is, as opposed to whatever arbitrary values they have chosen for the various
Right.
different companies. So um, when you sort of put this stuff in front of the masses, it could go in any of those directions, but the idea is that the market efficiency will figure it out.
If you were the founder of one of these private companies in the fund, what are the pros and cons? And you've hit on the pros a little bit, but what are the pros and cons of having your company in this fund?
Well, um, I think that the biggest pro is the exposure that you can get, right? And there might be also additional pros, because a lot of times these funds, just in the VC world, for example, if they have a particular set of investments, they're often bringing their companies together, having meetings and receptions and meets and greets for these various different CEOs and sometimes the secondary management layers of these companies. So there's opportunities to meet the other companies that are in the fund. So I think that aspect of it, we should probably speculate is probably going to be on par with any other VC, or I should say some of the top tier VCs, because that's the way I would consider it. Like if you're getting money from Andreessen Horowitz versus the Robinhood, private investment fund, that's probably on par. In fact, Andreessen Horowitz might have better systems in place for helping their founders or whatever. But for companies that are further along, they might not care about that as much. It might be all about the money. It might be about the exposure that you might have to to the public, or to the potentially thousands of people who might see their name in front of people. Like Robinhood's announcement put Databricks' name as in front of tens of thousands, potentially hundreds of thousands of people uh, who may have never heard of Databricks before, right? So now they're probably looking at Databricks and evaluating whether or not Databricks is a company that might they might be able to use their software. So it might actually have given them some additional exposure from a customer perspective. So there's definitely some benefits. I don't know if there's any drawbacks, honestly. Um,
Mhm.
you know, I don't see any drawbacks for the companies taking the money.
And I know you said you don't think you're gonna invest in any VC funds going forward. Would you invest in this Robinhood fund or a fund like
Yeah,
it?
absolutely. In fact, I already signed up to invest in the IPO. So, the thought there is that in the worst case scenario, I can just sell it. It's not like I'm committed anymore for 10 years. Whereas your horizon for investing in these funds oftentimes is 10 or longer, 10 years or longer, meaning you don't have access to your money for 10 years, which is, the more you understand like the limitations of these funds, and oftentimes their performance is not even better than the S&P 500. um, you realize that, okay, maybe it's probably a good thing that the public hasn't had access to them. Right. But on occasion, some of the funds will do amazingly well, so
So overall, I thought the announcement was great. The only thing that gave me a bit of pause was I thought Robinhood already solved this issue, the issue of not being able to invest in private companies a couple months ago when they announced that they were going to tokenize shares and they gave away shares of tokenized SpaceX and OpenAI, I think.
yeah,
And I felt like that solution was better because it was more a la carte, where you could pick exactly which company you want to invest in. Now, I don't
yeah,
know how that works with like the accredited investor rules and regulations. Like if you're allowed to, even though it's a token, if you're allowed to actually buy that or not. But that seemed more interesting to me than it forcing the investor into a whole fund. What are your
yeah.
thoughts on that?
So Robinhood is trying to push the envelope on the edges of what is um, deemed sort of like normal or acceptable, right? So this
Yeah.
tokenization of, I think they did OpenAI and SpaceX in particular, was something that they have private investments into into OpenAI and SpaceX, and what they did is they tokenized their own investments and sold those as sort of tokens where it gives exposure to their investments to a potential buyer of the tokens. Um, Kind of complicated, and immediately Sam Altman commented about like being extra careful that like this is not actually buying shares in our company, and our like that's not something that anybody can do. So he kind of made it clear that he was not on board with what Robinhood was
Yeah.
doing there. And I think that they may have backed away from that. I'm not actually 100% sure if they have or not publicly, but you kind of want the companies to be on board with this tokenization thing, and the regulators to also be on board. So there's definitely higher risk, and I don't think that that's going to come about as easily as a collection of investments, which you can then sell that the company that is making that collection of investments as its own entity that you're investing in. So this might be a way to get around the regulations, essentially.
Okay, so let's move off of Robinhood and let's move to another holding of both of ours, Rivian. They had their earnings, I think, last Thursday, and had a huge pop of like, I think, 26% the next day.
Yeah.
The stock was up, and then since then it's been down a bit. What are your thoughts on the latest Rivian earnings?
So latest Rivian earnings beat slightly on revenue, just a couple percentage points, and then they also beat on EPS. They were expected to have a EPS a loss, obviously, but they had slightly less of a loss, largely because they had more margin on their software sales than anticipated. So their losses were smaller than the market was expecting. But it wasn't it wasn't this like stellar quarter. If you were to sort of like show me the results of their quarter and ask me, what do you think the market is, how do you think the market is going to react to this? I would have said, I have no idea. It seems good to me, right? But but I could have never predicted that the stock was going to rip as much as 30% the next day, and it closed up 26%. Um, and that goes to show that like unpredictability of the market. The market has bipolar disorder. Right? It just sort of like takes things and decides one direction or the other, and you're sort of on for the ride. But and you can't. There's not much you can do in terms of predicting what's going to happen in the short term. But if we were to sort of like zoom out and decide, was everything that was reported a positive thing? And they also gave guidance for their R2 expectations and overall vehicle deliveries for 2026. Does everything seem to be on track for Rivian? And everything is sort of positive. Yeah, they expect to sell roughly 65,000 vehicles this year. That makeup is roughly 40,000 of their existing vehicles, 25,000 of the R2 vehicles. So in the sort of like big picture, yeah, they're going to have roughly a 50% increase in revenues, and that's exciting. And they're going to set up for an even greater increase in revenues for 2027. So all of that is just another sort of like indicator. Yep, milestone hit, and we're sort of like on track for Rivian to have a decent revenue growth, actually fantastic revenue growth, but it's not going to be profitable in 2026, obviously. And it's going to have an even more fantastic revenue growth in 2027. But for the full year of 2027, it's still probably not going to be profitable. But exiting 2027, it might have made a huge dent into its losses on a quarterly basis, to where it should be able to exit 2027 with making more than 200,000 vehicles. It should be making them at a substantial profit per vehicle. So when you multiply it all out, it should work out pretty good. So just another sort of notch on that long train of reaching profitability.
Yeah, I'm really interested to hear their earnings maybe like 2 quarters from now, once we really start seeing like the initial R2 numbers. It's funny because I was gonna post on Twitter and I didn't. After they had the pop, I was like, I think it's going to fade just like the Autonomy Day event faded. Only because my gut feeling, and I'm sure this is wrong,
Yeah,
is when the pop will happen and hold is when they actually start having the R2 vehicles like on the ground and
on the
shipping.
road.
Where like right now it's just the market's playing games
Yeah.
until then. But we'll see.
You know what's funny is that you're typically right about those type of predictions until you're wrong. You know what I mean? Like and what's funny is that um, it goes. An analogy that I can make is that you know, something that happens most of the time ends up, like you could sort of predict that it's going to happen again,
Right.
and sure enough you're going to be right until you no longer are. And what I have found with stocks is that I don't know when I'm going to be wrong, is
Right.
what it
It's
comes down to.
impossible.
So yeah, so I don't really make decisions around it, meaning like I'm not going to sell thinking that, oh,
Yeah.
the 26% gain is probably going to fade, and therefore I'll sell at the gain at the high, and then buy it again when it goes down to, I don't know, $15, or pick your number, $14, whatever you think. And this is the same sort of like discussions we had around Robinhood, that the technical analysis predicted that it might hit the 50s. In some cases, some people predict it's going to hit the 30s. By the way, I don't know how they get there, but like I can't rely on that sort of technical analysis based on historical patterns because the future is unpredictable. And, you know, this fade might, you know, it might give away all of the 26% in gains that it had after earnings, or it might start going back up tomorrow. I cannot predict these things. And I basically gave up predicting those things roughly, 15, 20 years ago when I was like, all right, I can't predict the markets in the short term, but I have a pretty good sense as to how companies are going to perform in the long term. And I'm just going to stick to that.
Yeah, like the way I view it is I have conviction in stocks and then I have conviction in what I think it's going to do. Well, I guess I have conviction in stocks in the long term and then I have conviction in what it's going to do in the short term. And for this Rivian move where I thought it was going to fade, that wasn't based on really anything outside of it just did that. So that was just
Yeah.
my expectation. I would never trade or invest on that. With the Robinhood piece, that's more of a like I have
Bitcoin.
higher conviction. I understand how Bitcoin works pretty well. Obviously it could do whatever it wants, but like that one I'm more uh open to. And I did, as you know, I sold a significant portion of my Robinhood shares because I thought it
Right.
was going to be, it was going to sell off a bit.
Right.
Um,
Right.
what was I going to say about Rivian? The one benefit that it does give me in like being like, it's probably going to fade is I don't get the feeling of FOMO of like, I should have bought more when it was lower. Cause now I'm like, I'll just go back down and maybe I'll buy more then. But I'm also happy with my current position, sizing, but it just helps me
But
keep like be level headed of like not being like, it's going to continue to run.
right.
But,
Yeah. Yeah,
uh,
it's interesting for sure. Like the temporary or short term predictions are often correct, but it's unpredictable to me, and
yeah,
therefore I don't like trade on it.
yeah. It's also like, you're just increasing your probability of messing something up. With every decision you make or every trade you make, the odds of something going wrong is higher. So if you're just buying and holding long term, it's just getting in, getting out, and that's it. But if you
Right.
are doing that on a shorter time frame, then you can miss the mark somewhere and totally
Yeah.
mess up your portfolio that way. So um let's talk about earnings. So think
Let's
we
do
should
it.
have some earnings. Yes, we do. Okay. Let me share my screen here. So we have DoorDash just reported their earnings. They
Ooh.
had a miss on revenue, basically 0.5% miss. They reported $3.96 billion in revenue, and EPS they missed by 17%.
Wow.
EPS was 48 cents, and they are down 5% after hours after being up almost 7% today. So net positive, but
Yeah.
earnings was not great.
I'm surprised they're not getting crushed with that huge of a miss on EPS.
Yeah,
That's interesting. But look at that revenue growth chart too. That is a pretty rapid revenue growth for the latest
yeah.
quarter. It's a
Basically
beautiful chart
going from like 1 billion to 4 billion here.
over the past
Uh,
4 years, all
yeah.
post COVID.
Yes.
That's very, very impressive. Because a lot of people thought that the growth of DoorDash and similar services would die after COVID, but they have just continued to crush it
Yeah.
as
Do
people
you
just
do you ever use
became.
DoorDash?
Oh yeah, yeah,
Yeah. I
almost
used to use it all
exclusively.
the time in the city, and then once I moved out of the city, I barely well, I guess now because I have a car, I'll drive myself and do pickup wherever, but
Oh, interesting.
yeah,
The
I haven't
the
used it as
the
much.
one thing that aggravates me every time I use it, I mean, like, obviously, it doesn't matter to me, but, like, it's surprising that this is the case, but the food cost is higher inside of DoorDash than
Yeah,
the restaurant itself, so there's like, everything costs more to begin with, roughly 15-20%. Whatever those companies have to pay to DoorDash, they're just tacking on to the prices so that they don't have to pay the fee. But then DoorDash adds a bunch of fees on top of that,
Yeah.
which they've been kind of shady about. Some of it they lump together with taxes, but then if you click on additional info, you'll see like the tax is one amount, and then there's their fee is another amount. Then they have the delivery fee that sometimes they'll promote as like $0 delivery, and it's like, dude, you have your fees on top of that. So like, what is your fees for exactly? So and then the cost of the food is extra. And then on top of all of that, you have the tip for the driver, which they
Yeah.
actually are pretty generous in the amount that they tip. So it's interesting, but like the convenience is worth it for me. Obviously, it's very nice.
Yeah, I think having the option is fantastic. You just need to use it sparingly.
Yeah.
Like
By the way,
understand it's a treat.
DoorDash and Grab come up a lot, and Grab is essentially DoorDash, but in Asia. And a lot of times, people are like very excited about Grab's stock for some reason, and not as much about DoorDash. And every time I've compared these two stocks, their stock has been relatively similar in terms of like their revenue growth and price earnings ratios and that type of thing. So my view is that as a U.S. resident, as someone who lives in the U.S., why would I want to own an Asian-based company as opposed to one that I personally use their services and have like more of a exposure to? Like so between those two companies, I would pick DoorDash all day long,
Right.
unless there was some major discrepancy in terms of valuation.
Okay, let's go to Figma. They had a pretty big beat for EPS,
Oh
300%
wow,
beat. They were expecting -4 cents and they are up 8 cents. So
that's huge.
profitable, you know. And revenue was also a beat at 3.5%. They have $304 million in revenue, and they're up big after hours. They were already up almost 5% today, and now they're up an additional 18%, 18.5% after
Wow.
hours. The question here, if we go to their price chart,
Yeah, this is what I
is
was going to say. What is
they've
the
just yeah, so they've just been kind of bleeding since their IPO and when they peaked at around $125. Is this a point, where they're gonna actually turn around? Or, I mean, even with this, with the big price move, they're still at $28.72 here. So are they still just playing in the sub 30s for a while? Or is this a point where they're gonna turn around? I find it hard pressed for them to go back to this 125 number anytime soon, though.
Yeah, that I mean, obviously, a lot of people, including myself and you, we were saying that like it just seems there's a disconnect between the valuation of the company and its revenue and earnings potential. And sure enough, now the stock price reflects that. Um,
Yeah.
but yeah, it's nice to see them beating. And then of course there's this sort of overarching concern about SaaS companies in general and what AI might do to them in the future. Um, that is an interesting concern, but I don't think that is the reason why Figma is down more than 70%. I think it
Oh,
was just it got too high of a valuation at IPO.
I don't know if you saw this, but so Cursor, which is one of the most popular text editors, like what developers use to write code, it's like fully integrated with AI. I'm telling the audience, not you, Hamid.
Right. Okay.
I know you know what it is. So Cursor just announced that they're going to have plugins, and there's a Figma plugin, so you can send Cursor your mockups directly for it to code for you,
Oh, wow.
which I thought was interesting at first. But then I'm like, I feel like it's easier if I needed to communicate a design. I feel like it's easier to just talk to Cursor directly, like do the normal chat, as opposed to making up a mockup and then having it do it. Like,
Well, I
it,
suspect it'll be more accurate if you did the mock-up, right? Whereas if you're telling Cursor what to do, it's going to try to come up with a design, but then like things might be off slightly the way that you want it. And if you just did it in Figma and you said, "Can you just implement this for me?" That might be a
it
more.
I think it depends on the product you're working on. If you're working on a brand new product, then yeah, like making a mock-up is super helpful. But if you're
Right.
already working on a product that has a lot of, legacy code, like standard patterns, it should be easy enough to be like, take this piece over here, take this component over here, and it's going to get it close enough as opposed to like working on a mock for, I don't know, an hour. You know, Basically, in a world of AI, I'm trying to reduce any manual work and just have the AI
Yeah.
do it for me. And like Figma is a very like manual way of
Does Figma
telling the
not
computer
have
what I want.
does Figma not have AI capabilities yet?
It does. I've never really I played with it initially when they first announced it, but I don't know how strong it is. But, like, at that point, why if I'm gonna talk to Figma and have it automatically do a design for me, I should just do that in Cursor? So,
Yeah.
I think all of that is to say, like, there's elements here where, like, AI can empower Figma, but I'm also just concerned of the need for these tools in an AI world.
World. Yeah.
Yeah.
I think
And
that's
that's coming
part of the
from a
concern
designer.
of investors. I mean, yeah,
Yeah,
investors are like concerned about the same thing that you're expressing, and that like, what's the world going to look like 5 years from now, where you could just tell AI and have a conversation with it and get the results that you want.
right,
Would these companies even exist in that world? And that
right.
is a great question. I don't know the answer to,
Yeah,
but
and I've said this before, historically, these design tools are not sticky, like, in the people are constantly just using whatever the best tool is.
right.
Um, so there's also that. Let's see, I don't think we don't have the numbers for Carvana yet, but we could do Palo Alto Networks. They reported yesterday. Um, They had a big EPS beat as well. They were expecting 76 cents, and it ended up being $1.03, so 35% beat. And revenue beat by 0.5%. Revenue was about $2.6 billion. Um, but they were down today, basically 7%. They're up a little bit after hours today, but again, they reported yesterday. So,
Interesting.
yeah.
Very cool.
Any thoughts on them?
Not really. Palo Alto Networks. I mean, every time I've looked at any of the security companies, they all seem to have been trading at really high valuations. So I've never like been interested in the individual companies, and then the sector as a whole is kind
I think we lost Hamid. Oh, I see him.
of. I think I'm back
Yeah, you're
somewhere.
back. You're back.
um, there we go.
Yeah, I'm slowly putting all the pieces back together.
Oh boy. Um, we might have to figure out these issues that we run into every now and then, but yeah, anyway, so I haven't invested in or looked at Palo Alto in a long time. What else do we
Gotcha.
have to talk about?
Okay, so I wanted to peel back the curtain a bit and kind of show everyone how we work. So, I'm constantly coming to you with different ideas of how we could improve Savvy Trader and Earnings Hub and whatnot. And typically you just like to shoot them down and tell me why these ideas will never work. So I thought, let's just show everyone
That's
how this
first of all,
happens.
that's not true. We just to clarify.
Yeah, a lot of I sprinkled a little bit of sarcasm,
Uh-huh.
in that. But I had, an idea for Bumble, how they can improve user growth, and I wanted you to be my sounding board of if this would be a good
This is
idea or not.
as a married man using Bumble.
Yes, actively using Bumble to do my research. I did tweet about this or post about this on X, uh, la I think last week, yeah, for Valentine's Day. Um, but the idea is all of these dating apps connect strangers with strangers, and I feel like there's an opportunity to connect people that know each other together, right? So, like, if someone,
Okay.
like, that you have a crush on, you're like a secret admirer almost, um, but there's no way to kinda put out the feelers of does this person like me without revealing who you are. So
Right.
so basically the idea is you're already on Bumble. It's an app on your phone. It already has the ability to connect to your contacts on your phone. So maybe
Okay.
you pick 3 people that you know that you're interested in pursuing. It sends each one of those people a text saying, "Hey, you have a secret admirer on Bumble. Sign up to see if you guys match." And then it's only revealed if the other person puts you on their list. And then the
Okay.
interesting thing is, if they add 3 other people and maybe it's you, maybe it's not you, you have this network effect, this like domino effect of like all
Ooh.
these people getting texts of like, "Oh, sign up for Bumble to find out your secret admirer," which is a very compelling reason to sign up for Bumble, I think.
Yeah.
So
Actually,
it's like
that
a
could be a great way to even get a new dating app going because the problem with
yeah,
launching a new product like that, again, is the marketplace. If the marketplace is not already massive, then there's like little reason to sign up. But your idea could even work for a brand new dating app.
totally.
Um,
And
so,
so
so yeah,
this
I'm sorry,
checks a
keep
lot of
going.
boxes of like it's a win for the person who has a crush on someone where they could kind of like put out a feeler without exposing themselves. It's a win for Bumble where you're growing your user base, and it's a win I think for the network as a whole where you're getting people onto the platform that are interested in finding love from
That
some respect,
that's
right?
that is a great. I gotta say that is a pretty great idea.
Okay, I need the audience to know this never happens when we're working on our
That
products.
that is
This is a
literally not
first.
true. It happened today, as a matter of fact. You
It
you
happened
you
today by
thought
accident.
well, you thought that I said a feature that,
Yeah, I
we
thought you
won't
were
get
going
into, but
somewhere and yeah.
yeah, and the feature idea that you thought I was saying was even better than the idea I had, which was a great idea to begin with.
Your idea was fantastic. Yes, yes,
Yes, of
absolutely.
course, my ideas are always fantastic. No, but, no, that is a good idea for a dating app, and, I agree because, like, and why limit it to 3? You could, like, say,
So,
select everyone that you're potentially interested in,
well,
and
yeah,
then
so what I'm thinking is you need to limit it because you don't want people to just spam it of
oh,
like,
yeah,
"Oh, I
that's a
just wanna
good
see if
point.
anyone's interested." But maybe you get 3 slots for free, and then you have to pay, and you get more
Ah.
slots.
Look at that. That's even a great monetization, path. But yeah, that's true. Because if like all of a sudden 20 people got the same text message, they
Right.
might be talking to each other. Hey, I just got a text message
Yeah.
from Bumble saying, "Hey, I got the
Mhm.
same one."
Yeah,
Who do
like,
we know in common? They might be able to triangulate who the person is.
yeah,
Uh,
totally.
that's funny. But yeah, that's super fascinating. I think that's a good idea. Yeah.
Wow. Okay. So I should run with this. It's funny because Bumble's like obviously I invest in a lot of companies that have software components, but
Right.
this might be the only company that is like just an app, which is
Yeah.
my specialty. So like I have more opinions on how they could execute more so than like a Rivian or even like a Facebook, for example.
Right.
Um, I actually have a lot of ideas of dating apps. Maybe we'll talk offline about building our own.
Does Brando know this?
Uh, we'll talk about that offline.
All right. Um,
Um,
anyway,
okay.
moving on. What do should we move on to Q&A?
Yeah, let's do Q&A.
Is Adrian on? Hey, Adrian.
Yeah, I think Brenna just commented
Oh,
Uh
in our
oh,
she
did
chat.
she?
she did. Oh, no, but it's positive. It's okay. Here.
That's good. Hopefully, she's not talking about you. She says, "I know someone who could use that
No,
feature."
that would be funny if she was. She's talking about her sister.
Oh, that's funny.
Yeah.
That's good. All right. Awesome.
Okay, so let's go ahead. Someone's asking about NuBank. Do you see NuBank becoming a large banking competitor now that their US charter has been approved?
I don't know who NuBank is. Do you know?
So I've seen their stock around, but I've never really dug into them. I mean, they
Is
have
that New Holdings? NU Holdings?
NU, yeah, I believe
NU?
so.
Digital Banking
If
Services?
it's not, then I wouldn't know them. Yeah, digital banking. Yep.
Yeah. So considering I didn't even know about this company much before. I have no direct or previous ideas around what regulation might do for them. But looking at their sort of raw numbers, their valuation seems kind of high for, especially for a banking type of company. Right now, $82 billion valuation, revenues of 14 billion, growing at 28%, which is a pretty substantial growth rate, actually. Looking at this revenue growth rate is pretty good. Huh, this is kind of interesting. I guess it's not expensive. A PE of 32 at that growth rate is not bad. I
Yeah,
maybe I should put them on my radar, but I don't know
I've
much about them.
I've definitely seen savvy trader portfolios with new in them, but I
Okay.
can't. Yeah, so it's on people's radars, but I don't really know much about it.
Adrian, let's go on to another question.
You ready?
Yep.
Let's do it.
Okay. Rivian question. I like the risk versus reward for Rivian. If R2 is a success, that word always trips me up. The stock will mostly fly. Any other stock you can think of with this kind of risk reward?
Well, the stocks in my portfolio have all pretty good risk reward, I think. But this is just my opinion, obviously. I think Rocket Lab has great risk reward because if Neutron is a success, and again, this is multi-year timeframes that we're talking about. If Neutron is a success, the Rocket Lab is going to be in a great position to, and space continues to be this rapidly growing sector of the economy, which I expect it to be, especially as Starlink has shown that communication in particular could be a multi-$100 billion, maybe $1 trillion business someday. Um, Rocket Lab is in a great position to build the satellites, but also get those satellites into space, into orbit. So Rocket Lab is in a great position. When you look at Micron in terms of risk reward, this is a company that historically has been a cyclical company. The memory sector in general has been cyclical, so that's the risk. But the reward here is that the cycle is a super cycle and might not have an end in sight, at least for the next 2, 3, potentially longer number of years. And their revenue growth is so rapid that over the course of the next 2, 3 years, they're going to make hundreds of billions of dollars of profit. So, um, or maybe not hundreds of billions, but over $100 billion of profit over the next 3 years. So, the if that comes to fruition, that is pretty incredible. And then if they continue to grow, or even if they plateau but don't go down in revenues from there, it could still maintain its fairly large uh, market cap at that point. So the risk reward there seems pretty good to me. Meta seems to have great risk reward. This is a company that is already growing 20%, more than 20% annually with their existing three businesses. They haven't even monetized or created products around their AI that they are making heavy investments in. So the reward there could be pretty substantial. That seems pretty great. Meta might have the best risk reward factor in the sense that it has the least risk, in my opinion, of the companies that I own anyway, but has fairly substantial reward. Meaning, I could see Meta being a 2x or 3x company in the next 2, 3 years, whereas some of the others, it's a little bit more harder to predict in the next 2, 3 years, and their downside potential is greater because they're not as profitable as Meta is. So Meta's profile is pretty attractive from that perspective. So, that's how I would summarize some of the companies in my portfolio.
Yeah, and if you want to see our portfolios, they're both in the description below, totally free to follow. The one thing that this reminds me of, which we were talking about before the show, is the question asks if R2 is a success. My question is, what does that mean? Like, what, like, how are we defining success? Um, So that's something
That is a great
I'm
question.
curious about.
I think that
Yeah, you go.
yeah, there's multiple ways of looking at R2 as a success. One is them selling what they can build, so selling at capacity. Another is selling at a profit, which is obviously important in order for them to be a sustainable company. And then another factor would be customer success or customer satisfaction rating
Satisfaction.
of
Yeah.
and general like reviews and such. And I suspect that all three factors are going to be a success for the R2. So
Right. And then my follow-up question would be like, do we need all three factors to say it was a success, or is one of those okay, or two of those okay? You know?
yeah.
Okay. I think that is it for the questions.
Q&A.
So
We
thank
can
you
wrap
all
up here.
thank you all for listening and to us just talking about, ranting about all this different stuff and being silly. So you could like, comment, subscribe, do whatever you want. Don't do it. I won't judge you. We
Thanks,
appreciate
everyone.
it.